When do we hit value with General Mills stock? It's going down, the fundamentals are stable, and we just had an Investor Day conference discussing how they're going to go back to growth and all their brands, the Cheerios, and how the consumer wants easy access to quality food they trust. But I have some question marks there because the consumer is not buying, it's not growing, and they are trying to turn ship around by refurbishing inventions with all their foods. But the key question with these brands and when they hit value from a margin of safety investment standpoint is, are we at the end of the TV commercial brands era? Has that changed? And if that has changed, then it will continue to be ugly for General Mills, Kraft Heinz, and these companies. And I went through the presentation, and on page 139, they discussed ice creams, and only then, after 140 pages of food, we came to the financials. And they plan to grow, good cash flow conversion, and that's it. They have this trend that long-term algorithm will do well, but what if it is like this? The competition is not standing still, reaffirming flatness and profits down over time. They are free cash flow positive. This is okay. However, we must also compare that to the market cap. That's a 9% free cash flow yield. And if I look at the dividend, and if I look at the buybacks, the 3% difference between 6 and 9 dividend plus buybacks is reinvested for that growth for marketing. Thus, the real free cash flow yield of General Mills is 6%, and that's not enough for private equity. If you want a margin of safety, they want 10% on these risky turnaround bets. Same as with Kraft Heinz, 6.34 dividend yield. It's approaching value already a little bit more, but we want profits, not splits. Even Buffett said, there is no point in splitting because the point is to make money, not marketing. However, they are maybe splitting to make it easier for a takeover to at least get some value. And yes, it will jump on a takeover. It will jump like Beyond Meat on Mimi or short selling, things like that. Enron at 20 cents was a great buy, and somebody made a killing because it bought, the shorts were covering, it went to 80 cents. Before going bankrupt. I don't think General Mills will end up like this. Somebody will buy it. So we are close to the bottoms also with Kraft Heinz, but it's still risky, and perhaps it will do well, 50% up in the next year or two, but perhaps it will do nothing for 5 years. And that is something that can be costly for your portfolio because it's about the waiting that something happens. It's not the business creating huge value. That's something I don't want in my portfolio. Beyond Meat was very high when I analyzed it. You might need more than 6% in this environment to just have it sit there promising something. If not, your return is bad. So check my research platform for growth alongside similar valuations.